One day, the market was absolutely buzzing with excitement over AI, and then the next? Just pure anxiety. So what happened? We're going to break down this single day of chaos, a day where tech giants tumbled, speculative bubbles popped, and investors all started asking one very, very expensive question.
All right, here's how we're going to connect all the dots. We'll start with that absolutely brutal sell-off in tech, which you'll see leads us straight to the trillion-dollar question that's facing AI right now. Then we'll look at how that fear spread to risky assets, check in on how Australia managed to weather the storm, and finally, we'll pull all the way back to see what this new reality really means for investors.
Okay, so the whole thing kicked off in the tech sector. It was like a shockwave that sent a huge signal of nervousness through the entire industry.
Our source actually called it a horrid day, and for good reason. I mean, this wasn't just a minor dip. It was a broad, really painful downturn that hit all of the market's most promising sectors. Everything from AI to software got hammered.
And if you want to see just how severe this was, look no further than AMD. This is a crucial player in the whole AI race, right? Well, its stock plunged 17% after a weak profit forecast. And a number like that? Well, that was enough to spook the entire market.
And the pain? It spread fast. We're talking giants like Nvidia, Tesla, and Google. Companies spending absolute fortunes in this AI arms race. They all got hit hard. You could almost feel the market starting to think, you know what? Maybe the price tag for the future is just getting way too high.
So what was really behind all this fear? Well, it all comes down to this massive shift in how investors are looking at the huge AI spending spree.
To really get your head around the scale of this, just look at Google. They're planning to spend about $180 billion on AI just this year alone. It's a staggering figure that used to inspire confidence. But now, well, now it's just causing a whole lot of anxiety.
You know, it wasn't that long ago that an announcement like that would have gotten a round of applause from investors. Spending billions on future tech, that was a good thing. It was a clear sign of ambition, of future growth. They loved to see it.
But that whole sentiment has just flipped. Now that all these tech giants are collectively spending trillions on the same AI dream, the applause has been replaced by this nagging, persistent question. That confidence is turning into real concern.
And it all boils down to this one critical question that's now haunting the market. After throwing all this cash at the wall, when are these enormous AI investments actually going to start making a real tangible profit?
And you know, this wave of anxiety, it didn't just stay inside the big tech bubble. Nope, it spilled over into the riskiest corners of the market, where a whole different kind of bubble was about to burst. Suddenly, we saw this broad retreat from anything that looked like a high-risk bet. The bubble in silver, for instance, a traditional commodity, it was bursting with a 14% drop. And at the exact same time, Bitcoin crashed, marking a staggering 43% fall in just 4 months. The scale of the carnage in the crypto world is just, it's hard to even comprehend. Across all these speculative cryptocurrencies, a mind-boggling $1.8 trillion in value was just gone, wiped out. So what was behind that huge crypto sell-off? Well, one observation from our source points to this dynamic. After a period of really intense crypto promotion, a lot of people who'd made huge profits just decided, you know what, it's time to cash out. Okay, so with all of this chaos going on over on Wall Street and in Asian markets, how did things play out down under? Well, the Australian story is actually quite different, and it's all thanks to the unique makeup of its market.
And this is pretty fascinating. While all those tech-heavy markets were getting hammered, Australia's market barely budged. It only fell about 0.5%. So why? Well, it's because heavy losses in the mining sector were almost completely canceled out by gains in more stable areas like healthcare and even wine companies. It really cushioned the blow.
All right, let's connect all these dots. What does this single day of turmoil really tell us about where the market is actually heading? So, here are the key takeaways. First, we're officially in an era of AI anxiety. It's not about how much you spend anymore, it's about how much you earn. Second, the big speculative bubble has definitely burst for assets like crypto and silver. And third, that whole growth at all costs mantra, it's facing some very serious skepticism right now. It all really points to a fundamental shift in the market.
We're moving away from hype and promises about the future, and we're coming back down to reality. And that means the core question for every investor has changed. It's no longer what's the next big thing, it's what's profitable right now.